Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by FounderSuite. Today, I'm super happy to have Igor Jablokov of Pryon coming to us from San Francisco. How's your day going, Igor?
Great. Thanks for having me.
My pleasure. I got the pleasure of hanging out with Igor on Friday. Igor's a FounderSuite user and I think you did nothing but give me feedback, good ideas, and bugs all weekend on my app FounderSuite. So thanks for that. I was trying to go camping, Igor, and you're giving me like 1,000 bugs in my platform, which is actually super useful. But how was your weekend?
That's how nerds do community service. We may not be good with rakes and shovels, but we can find bugs.
You can bug hunt all day long. Awesome. Well, so you're here in San Francisco, but you're actually based in Raleigh, right?
Yes.
What's the startup scene like in Raleigh, North Carolina, and why are you there?
It's pretty good. So my last appointment, I was an entrepreneur in residence with Blackstone, and so working together with Duke University, NC State, UNC Chapel Hill, to try to help them commercialize the over $2 billion a year they get in federal grants. That was a big problem that needed some help. And I also moved there because the other EIRs I was working with were just exceptional. There was a half dozen of us that were in tech, another half dozen that were in life sciences, and to be part of a community where I can learn from great peer mentors was hard to pass up.
Cool. So what is Pryon? What do you guys do? And I challenge you to try and explain it in as simple terms as possible so folks like myself can digest it easily.
Sure. So Pryon was actually the code name for the speech engine that eventually became Alexa. So that's where the brand name comes from. And so we're trying to bring that natural language experience to work in what we call not so much artificial intelligence, but augmented intelligence, which is we're going to be overloaded by content, unstructured content over the course of the next half decade. And AI is going to be the only way that we're going to be able to keep up with the morass of knowledge that we need to tap to operate our businesses.
Okay, so getting more specific, is this something that is powering e-commerce sites? Is this something that you're licensing to enterprises to make use of their data? Give us maybe one or two use case scenarios of how this fits into the universe.
Sure. And it's not so much even being lost as a piece of middleware. It's actually we're starting from a user's perspective inwards. That's what's great about having any sort of natural language tool. So we want it to be a proxy of the employee, right? So we want you to be able to use it every day in the same way that Uber gave everybody a chauffeur. We want to give everybody a Nobel Prize winning assistant that knows everything about your job, everything about your career, everything about your enterprise, your partners, your customers, your travel policies, your employee handbook, everything you can think of, HR, finance, procurement, every sort of function that's out there. And this is a big challenge, right? Because when we think about how we use the Amazon Echo at home or Google Home or similar platforms like the Facebook portal, we buy into those ecosystems, meaning we become an Apple customer, we become a Google Android customer, so on and so forth. And it's relatively easy for us to get accuracy out of those experiences, right? Which is news, weather, sports, music, flip on a light bulb or so. At work, though, many of these ginormous enterprises were built through massive M&A activity over the course of the last few decades. And so they're heterogeneous environments. They're a hodgepodge of these different patchwork quilt systems. Sure. And so to be able to bring a natural language interface on top of that complexity is a heck of a problem and one that we're working towards solving.
Yeah, that's interesting. That's actually a much simpler explanation than I kind of get it a little bit better, even though we've had multiple discussions. I mean, does your pitch ever just go down the path of Alexa for the enterprise, or is that too simplistic?
I could have just said that, but it's going to be a harder problem to solve than even an Alexa.
Yeah. Okay.
That's the fun of it, right? I mean, my team has intellectual property and DNA behind a mess of experiences, right? So, a lot of the stuff that people know is Google Voice and Siri and Alexa and Cortana and Watson and so on and so forth, trace, some of their roots in the primordial ooze of R&D that my team has done in the past.
Mm-hmm.
So we're up to the challenge.
Cool. And kind of status of the business or the technology today, in the market, in trials, in development, We're
in trials now and working towards production use later this year.
And is it actually something that the technology would bake itself into others, Oracle's applications, or is this something you sell to an enterprise to manage their data and put this audio or verbal layer on top of it?
We'll start with direct sales to enterprises now. Obviously, for any startup, that's not scalable, right? And so you're going to be working on scaling partners in succeeding quarters because they already own these customers and have these relationships. And so what you typically do is direct sales in the beginning in order to build a reference base, right? Reference customer base that you then take to the scaling partners and say, hey, I can prove that it works for this bank, it works for this airline, it works for this energy company, and you have 100 more just like that.
Cool. Let's talk about fundraising. So how much have you guys raised and over how many rounds?
About $25 million over 2 rounds.
2 rounds. So seed and A, is that correct?
Mm-hmm.
Let's go back to those early days. How did you bootstrap this, or did this spin out of the work you were doing at Blackstone, or what was the early impetus?
Probably in January 2017 is when I had the idea for the concept behind the company, and then it was very peculiar. Then I started calling on buddies at Alexa, buddies at Watson, folks at Cisco, just to get their read on whether there was a real market opportunity and in the way that we were proposing to solve this problem. And then I just started calling on some of the folks that we pitched last time, right? So when we were raising our Series B last time, some of the strategics that we were trying to bring into the syndicates, right? Because we were talking to Sequoia and Mayfield, Intel Capital, Telefonica, Nokia, and Comcast at the time. Google and Amazon and some other parties ended up jumping the tracks and they went after us.
And to be clear, this is what you're referring to is the previous company that ended up being the seeds of Alexa, correct?
Right. Well, what I'm saying is in the early days of this company, what I ended up doing is calling on some of the folks that were considering joining our Series B last time.
Mm-hmm.
So that's a thread that I started pulling in terms of starting to socialize this even before the company was founded. Mm-hmm. Hey, is this something that's fundable, right? Do you see a market opportunity? Do you have portfolio companies that we can get gravity assist? That could be partners to this. Are there some of them we should be working with that will help us get to whole product faster? Do you know of executives that may want to join? Is this something that you'd want to invest in, right? That's one of the last questions you asked, not one of the first ones.
Mm-hmm.
So we had a great time meeting, different strategics and institutional investors, in the beginning, and we were able to build a syndicate around the seed.
So it was kind of, you hadn't written a line of code, I'm assuming. It was kind of like, here's what we did before. Obviously, it's impactful technology that we've been involved in before, and here's what I'm thinking. Is this something fundable and kind of, would you be interested? I mean, I guess you're sort of pre-marketing it to these investors, or what?
Yeah. I mean, created just weird. We got a couple tickles of M&A before we even wrote anything down.
Mm-hmm.
How big the idea was to them, but no, we created a presentation deck and we just started fundraising with a PowerPoint. As is the typical cliche.
So, how much was the seed, and who led it, and how did you corral those folks?
Okay, was that a leading question?
Well, a little bit, but yes.
So okay. Actually, our very first investment was with BootstrapLabs, which is a great applied AI seed fund here in San Francisco, And that was because I started using your tool. I think I was introduced to it via Silicon Valley Bank. And I had started sending you some suggestions on product improvements and finding bugs and things of that sort. And then you replied, "Who the hell are you?" And then we ended up meeting and getting engaged on how this could better serve founders in similar situations like ours. And you said, "Hey, I really think you should talk to the BSL guys. This would be right up their alley." And by then, I think that was the second time I met the guys. Beforehand, it didn't quite spark. They invited me to attend a really great conference that they put on once a year during the April timeframe, and then things just took off. A 30-minute meeting turned into practically a 3-hour meeting, and they were just great to have from the outset, because remember what I said, applied AI. This isn't just folks working on the theoretical fringes of this work. They really are thoughtful about take this next gen stuff and apply it to a real business problem. And we bonded over that.
Yeah. And yes, that was a leading question. Thank you for responding to the lead, but it is gratifying to know when we see our customers getting funded, even if it's the tiniest little role we play. And for the record, just a total side note, Igor's the one that kicked our ass into gear to finally build a mobile app, which now we have a little bug, which we're going to fix soon. But Igor's sort of the
father
or the germ of an idea around the mobile app for Founder Suite. So
just great.
It's all cyclical and karma, right?
Which is great. We're all always running around town, right? People are always giving us ideas for, hey, you should meet this person there and that person there. And it's to sit even in front of a laptop to be able to do sustained work over a course of hours is starting to become the new luxury.
Totally true. I find myself working more and more at home only so I can have focused time blocks of time to just crank, because anything else, and I'm, and then I guess like meeting you, Friday was a good example, right? Went down, met with another founder, customer downtown, and hung out with him for a while, then came and met with you, and that was a great day of like meetings and networking and catching up with people. But then every other block of time during the week is like focus time, it's like, I feel like you have to separate the two. I don't know. That's just me. So cool. Good stuff. So BootstrapLabs, Nikolai and Ben Levy over there, if you're doing applied AI. But still, this is pre-code, right? I mean, this is still basically the concept and the team and background of the team that you're pitching, correct?
Right.
So let's take that and move forward to the Series A, which was a pretty large Series A, right? 2024?
Yeah, it was 20 million plus the previous seed converted over to it as well. So that's what caused it to be about $25 million all in. Right. So it was a strange and wonderful situation where a seed fund wanted to lead an A, right? So it was Steve Case's fund together with JD Vance and the rest of the great team. They're headquartered in Washington, D.C. They have this thing where they're trying to support, high-tech companies in other up-and-coming regions. And so we qualified for that, certainly, being headquartered in Raleigh. And they were able to bring Jim Breyer on board. So they co-led that. But we also had Digital Alpha come in, which is typically a private equity later stage fund. That has some Cisco backing, and then also with continued participation from Greycroft, they were in our seed, BootstrapLabs, of course, Double Down, and then Two Sigma Ventures and several other parties. So it was a good round, and again, when you have people that essentially do fund drift, when you have a seed that's reaching into an A, and then you have a private equity firm that's going down market into an A as well, and they're both meeting in the center, that's a pretty good tell.
So what had changed? What had the company done between that seed and A? Because that is a big A by anyone's standards, and I don't believe there was. I mean, it was a fairly short time frame between the two, right? A year.
Well, it appears like it was a short time frame, but remember, all of us are running a locomotive while laying track simultaneously. So when the BSL team provided our funding, we immediately hired our head of engineering and one of our most senior engineers at the time, right? And so 250,000 comes in, boom. The team starts growing, and more financing starts coming in, and we keep growing the team until the seed, swell to $4.5 million. I know a lot of people want to wait until a close, and they see then how much they have to work with. But here it's all about velocity, right? So as fast as the money was coming in is how fast we were growing. And so by the time we ended up, transitioning from C to A, we had already, over 20 people on staff.
Okay. So you didn't do a price round? Was this a note that you were just collecting commitments as it went along, or what was the actual structure of how you sort of, like you just described it, money comes in, you're hiring people?
Yeah, it was a convertible debt instrument.
Mm-hmm.
At first, obviously, all of us read these Y Combinator things, and we'd want to do safe instruments. The safes are not as common on the East Coast, and so people kind of scratch their heads and try to understand them. What does that mean? Is it safe for you and unsafe for me? And so we just ended up doing a pure debt instrument.
Okay.
Which has a happy coincidence that it actually drives a strike price down for your early team members, because it's carried on the books as debt.
Mm-hmm.
And reduces your enterprise value. That was a nice little trick.
Mm-hmm. Interesting. Cool. So let's go to back to the Series A. So you mentioned Steve Case led it then, and I don't think you mentioned his fund, which is Revolution. Is it Revolution Partners or Revolution Ventures? How did you get connected with him, and what was the path towards his door?
So interesting, dramatic situation in a good way. So the reason why they were able to lead is because we had the runway, because they participated in the seed as well.
Okay.
And the way that we were originally just looking to raise a $2 million seed instrument. And in fact, we weren't even looking to raise a seed instrument. We were going to go right to Series A from the outset. I remember sitting with Norm Winiarski of SRI fame. He helped spin Siri out of that research community, right? Mm-hmm. And he's now a professor at Stanford. So I had breakfast with him this summer before we started, and I said, "Hey, how do I capitalize this? How should I get it going?" And he said, "Well, compared to some experiences or some AI companies where it's a science project, a text style speech, and then an exit, last time you had, millions of customers or, users, dozens of enterprise and carrier customers, so on and so forth, and you did so much with 12 million, you probably can jump right to a Series A." Because that's what he's seen Dag and team do at Siri, and that's what they were able to accomplish with BootstrapLabs as well. And since it wasn't my first rodeo, that felt compelling. Well, okay. When I started floating that idea, some contacts of mine, friends, and what have you said, well, if you did that, we wouldn't be able to access the deal. Can you make a lightweight seed instrument? And that's when I hired Kevin Rooney at Cooley. That whole team, has been phenomenal for us, and they generated, a seed instrument. BSL joined that, and we were only going to raise $2 million against that, and then, work aggressively towards our Series A. Then, well, $2 million became $3 million. When we discovered Greycroft, they wanted to come in, and $3 million became $4 million. When 2 Sigma wanted to come in, and then $4 million, became more. When even though I'm OCD, I like closing things to even numbers. I think Steve communicated with Alan Patrikoff, who's a senior partner at Greycroft, and was, I think, one of the early investors in AOL that they'd like to participate. And it's hard to turn a team down that has an exceptional program. Right, and you're building all these super friends when you construct these seed rounds. They all have CEO summits and retreats and portfolio companies that you could be working with, and PR firms that they're working with. They become a force multiplier. Every single party that was selected during our seed was not the dumb money that people typically joke about. Everybody was brought a lot to the table.
So it's a bit of a different strategy. I haven't heard this particular strategy too much on this show, where you were kind of starting off with this $2 million seed and you just kept making it a larger seed, letting more people in, which makes sense. Did you have to change, or did you change the terms for later stage investors versus what, like, to give specifics, but what the early guys like BSL, BootstrapLabs got in? Like, does the terms on that seed round change as it grows, I think is the question I'm trying to ask.
And that's a tough question for them, because certainly there's a lot of value in being early in these deals, because we wouldn't exist without them. I know when some of the folks at Andreessen found out how big the seed was getting. Apparently in Silicon Valley there's already a name for these style of seeds, and they're called mango seeds.
Oh, interesting. Mango seed. That's new to me.
A mango seed, right? So it's a larger seed than expected, which used to be the Series A of yesteryear, right? My Series A last time was a $6.5 million round. My last seed round was a $1.5 million round. So, things are certainly getting bigger. Things are less expensive to operate than last time, because we have cloud versus having to get your own servers, but people cost a lot more, now as well, and supporting them with healthcare and other types of attributes. On back to your question about whether the terms were different, our thinking was we kept the terms the same, and here's why. It's hard to say, hey, you have an advantage because you're early, but then somebody else is at a disadvantage when they're going to increase the probability of you turning over into a Series A company, so that you don't have to write down your early investment.
Mm-hmm. Yeah.
I'm an LP in some funds as well, and I look down at my statements and I see minus 90% write down for several of those things, and it's usually just one thing that's popping as a unicorn, and a second one that's doing moderately well, and everything else is minus 90%. So I was really selling folks on the concept that the probabilities go up, right? And let's just create terms that maximize building that network out, because while we talk about having a sense, right, in our presentations that here's our vision, here's our strategy, and here's our execution, a lot of this other thing is just networking, just like how you brought BSL to the table, right? Sure. And it's accidental, and it's serendipity.
I think it's actually, and the reason I was going to make you answer that question, and I'm glad you did, because I think it's an interesting potential strategy for startups. Like, maybe you start out with a relatively small seed round, and then if demand warrants it, you grow that round accordingly, or you don't. It's sort of like letting the market set how the size of your seed round in some ways.
I get it. Some people can game it where they artificially keep it low, and then they play this game of, oh my God, look, I got oversubscribed, 2 times over, which we did. We were oversubscribed, but it wasn't gamed. There wasn't some weird, Y Combinator game that we were playing. I mean, it literally was happening to us, and it was to everyone's advantage, because we were getting amazing R&D talent, that was showing up on our front door, amazing business talent that were that was showing up to become part of the early team, and it only benefits all stakeholders.
Okay.
I really do like the stakeholders. It's not an inside team versus an investment team. It's everybody working together, and this is how these things are actually built.
So, okay, let's get into a few more details here. You had a pretty nice group around the table for that seed, mm-hmm. and you get out there, you start hiring like crazy, start building the product. What triggered it? How did the discussions get into that Series A round with Revolution leading it? Like, did you go back to them saying, hey guys, I want to just strike while the iron's hot and scale up faster? Did they come and say, let's preemptively pump some more money into this? How did it flow?
Yeah, I think it becomes more organic than that. Our chief operating officer had a great relationship with Digital Alpha, and in looking at their portfolio, we knew that we wanted to work with a number of their existing investments, and so that's what kickstarted the drive towards Series A. And so Rick from that team was amazing in terms of bringing to bear, some of the folks that he was working with at Cisco. and beyond. And so, they really took the time to drill into the business and say, hey, you can be well placed in the service provider space, in the data center space, and in the security space. So that's what started the drive towards Series A. Now, there's lots of recipes for how you should operate a seed-backed company, right? Which is close your round, have 2 years of runway, do your product market fit, get 1 or 2 sample customers out the door, and we certainly had that with another partner called Engage Ventures that we got connected with relatively early on, probably within a half a year of founding ourselves, where we started the work with these large corporates to make sure that we were building something that they wanted. Right. And so that was part of the evidence that was necessary for us to transition to Series A. At the same time, we didn't artificially limit ourselves where there was some religious adherence to the 24-month runway rule.
Okay.
And I just told my team, listen, it's team and TAM. Let's build the team. We know we already have the TAM. And like Thelma and Louise, we're going to hit the accelerator and just go towards the cliff and just trust that we're building enough meat on the bones with the technology, with the team, into a massive market opportunity. By the way, I used to call it a $1.7 trillion market because that's what Gartner sized it, and their latest numbers are even more befuddling than that, which is possibly twice that. Mm-hmm. So why do I have to worry about competition? There's plenty for everybody. This whole, digital transformation has been happening. The cloud stuff has been happening. Mobile already happened. Now it's all about this AI transformation, and there's not enough, companies like ours to go around. And so there's not really a competitive environment. There's plenty for everybody.
Okay. Did you even open up, getting back to the fundraising, did you even open it up to firms outside the ones that had come in on the seed, or did you, how did you put together? Did you run a process? Did you have a bake off? What?
Yeah, well, I mean, this is why we use Founders Suite. You probably have those metrics, right? Some of the biggest, founders in the private equity space talk about the 6% rule, and so, while some of us are, have a track record. The only thing a track record basically does is it helps you get, more meetings, right? With less friction than you would have last time. But it doesn't mean you close more term sheets, right? It just means you get more meetings. We still have the equal probability of winning funding like a first-time, founding team. And here's why. It's a meritocracy. That's what's thrilling about, our field. It's a meritocracy where the best ideas should win, the best business ideas should win. And so knowing that it's a numbers game, right? So you're going to meet 100 or 200 firms. If you want 12 term sheets, you're going to meet 200 firms, and just make peace with that. There's no as Gary Shandling says, there's no shortcut to comedy. If you want a shortcut, there isn't one. There just isn't. Plus, you're learning so much from these brilliant people that are working in all of these different firms as well. I mean, these are the top MBAs and the top operators, that have top 10 tech companies as well. Why wouldn't you go on the road and go to Austin and LA and Seattle and here and New York and Boston and Atlanta and everywhere you can go to talk to these folks.
So I think that's something I found when I was fundraising. It really did make me think about my business in a lot of ways. You get, like you just said, a lot of very smart brains kind of analyzing your business, oftentimes shooting it down, but often also times offering up some really interesting ideas and strategic visions around that. And that's free, right? I mean, the cost of your time of taking those meetings, you can get a lot of pretty interesting focus group material from.
For you, it's even better, right? I mean, you never have to show up, fundraising whatsoever. It's like, hey, I want to come here and pitch my company to you as an effective tool for the rest of your portfolio companies, because we know how much of a time sink fundraising is. I can compute that I save an average, CEO X amount of hours per week. And that's X amount of hours that they can actually use towards, operating their bloody company, which is what you actually want them doing, right?
Right.
So, I read piece of news or an essay yesterday about this one, fellow that took fundraising from SoftBank recently, and quite shrewdly, he didn't show up wanting any sort of financing because he didn't need it. He just showed up and said, "Hey, how do I work with your portfolio companies?" And SoftBank is the one that pivoted him towards, an investment discussion.
Sure. Yeah, this has been a theme on this show where founders will use the fundraising process as a biz dev channel, which I think is actually pretty clever. Right? You can get two birds with one stone.
Yeah, I think that's what piqued Sequoia's curiosity last time, right? That we were selling into Ring Central and Bubble Motion and Text Plus and Jawbone and several other companies that existed at that time for them.
You mentioned the 6% rule. I don't know if we specifically defined it, but that's just saying you'll close on average of 6% of investors you meet, or what is that?
Yeah. That's just a rule of thumb.
Sure.
It's a rule of thumb to remind you to be humble and do your goddamn job. If you care about your team and you care about your stakeholders, you're going to be on the road. Don't cry that you've met all. This is certainly true in second tier markets, that you've met all dozen VC firms that are relevant in your market. It's like, great, now buy a plane ticket.
Sure. Yeah. How much of the time do you spend traveling around? Because you're out here right now in San Francisco from North Carolina. How much of your time do you spend traveling around meeting investors?
Well, right now it's obviously a lot less, right? I mean, it's more so to develop, interactions so that we can figure out who we should be partnering with, to get to that whole product, right? And to look across their portfolios. So that's the dominant reason that we're out here, independent of other.
Yeah.
We have a small team here, right? We have a go-to-market team that's based here as well. And I spent last week in Seattle working with the engineering team.
Any insights, like, Revolution Partners, interesting model. They're going around the country. They do these events. Any insights to pitching them other than be located outside the Bay Area? What's sort of the process like with those guys?
Well, they have different funds, right? So they do have that seed fund that is focused on outside of the traditional centers. But they have a mainstream fund that invests in things that are anywhere as well too. Remember, part of what happened to us in 2017, right, in terms of meeting all of the firms that you saw, probably in Founders Suite, me registering in there, is the fact that you're building a relationship with all of these folks and a mess of different firms as well, and they need to see you more than once.
Yeah.
Nobody's gonna meet you for the first time and say, hey, here, here you go. And by the way, I'm not a big fan of these monthly update emails that people set out. Because the delta, right, the percentage change that our businesses have month to month isn't that exciting and interesting unless you're in hyper growth, right? And so, just showing up once every 6 months where it's obvious to see the quantum leap in terms of, hey, I had this, this much of a team and now it's this much, and now I had this much of a, pipeline and now it's this much, and I had, X number of modules developed and now I have this much, and then I show up a third time, 18 months later and it's this much. So where the progression is a lot more obvious.
Sure. Yeah.
It's sort of like gaining or losing weight, right? If you see somebody doing that on a day-by-day basis, it's imperceptible, right? But when you see somebody, 6 months later, you can tell that, something's afoot.
Yeah, for sure. So that's an interesting strategy. So is that your cadence? You're sort of building these relationships or touch points on a 6-month cycle, and are you already starting to do that for Series B?
But there's multiple reasons, right, to meet folks, right? Part of it is Series B, right? Part is to develop partnerships, scaling partnerships with some of their larger unicorn portfolio companies that already exist, right? Part of it is that like that scene in Hunt for Red October. Remember when the Russian sailors thought that the captain scared the Ohio class submarine out of the water, right? Meeting them and basically saying, hey, my company's going to dominate this piece of technology in this particular market. So tread on that, at your warning, right? I'm not going to compete with WeWork. I'm not going to compete with SoftBank Robotics, right? There's There's certain folks that are working on something where they're applying a lot of capital and know-how, and it would be comical and disastrous for us to enter that. And in some ways, given our pedigree, there's certain application areas and certain technology areas that it would be comical for you to get close.
Yeah, good stuff. All right. Well, I've kept you a fairly long amount of time. Any advice you would give your slightly younger self if you were doing this all over again, or any tips or tactics we haven't covered here?
Yeah, what would I have told him? I would have stolen a DeLorean and grabbed you by the collar and brought you back in time. Right? So, I mean, it's only because of all of these tools that each one of us are developing that things are better for us than ever, right? All of these SaaS tools and independent of Founder Suite, the emails, the Dropboxes, the Cartas, all of these types of technologies are just making it easier than ever to operate these companies. One of the things that I did last time is I didn't draw salary until the first line of code was written. Mm-hmm. Here's why. I don't want to be a fundraising CEO. I want to be a product one, right? We don't deserve anything unless we're building product and we're taking it to customers, because that completes the circle of life, if you will, mm-hmm. That our investors are expecting of us, because they're funding a business, not a charity. And so anything that we can do, to lighten our load, lessen our load, make us more efficient towards that drive is something that is on the good part of our life versus a time burglar. And so that's a credit to you and your team working that, and everybody else here that have founded companies that are trying to better people like us, because we're trying to create things that are better in your situations as well. And that's how you build a very strong ecosystem.
Yeah, cool. All right. If people want to learn more, it's pryon.com. Anything you want to plug, open job recs, and anything at all you want to broadcast?
No, I think we have some of the open job recs on our website. It's a high barrier, but give it a shot. We love working with the best folks possible, and these companies aren't meant to be 20% time, right? That's maybe for folks in big companies, right? We're hopefully attracting people that are highly passionate about the work. This is in many ways, people ask me, what do you do for fun and what's your hobby? And I say this, and that's the way it should be, right? Those are the types of people that are making products you want to buy from. And it doesn't matter if we're talking about a piece of SaaS software or a pair of shoes. You can tell the difference, when you're acquiring goods from people that really care about what they do versus not. So that's what we're up to, and appreciated everybody's time today.
Cool. Thank you, sir. Igor, we'll catch you after your B round, which I'm sure will be any minute now, right? The pace you're going. So thank you. Till then.
Much.